Hello traders, my greetings to each one of you. Happy holidays, and I wish you all the best in the upcoming year with all my love. King of Forex from the 1% Club. So here we are on euro dollar on 1 minute time frame, and I'm trading from a small account, so I will be showing you how to make big profits from a small account. As usual, we have EMA 9, 20, 50 and 200. Okay, and now I will start by selling. It's a great selling opportunity. Why? Because first of all, price was going down, trending down here. Price drifted down here. Okay, so I will be selling more before explaining. Okay, I'm using a small account and a very low leverage, but even though you can still manage to win. Okay, so here we are. That's enough of orders. Okay, price went down, crossing EMA started to cross each other. Okay, making these parallel lines here. Okay, and then price retraced toward EMAs. But as you can see, the first support resistance, the first resistance area between EMA 9 and the 20, price was able to break it immediately. But the second one between 20 and 50, which is more powerful, the price faced difficulties in breaking it. As you can see in this rejection here, price tried to enter the most powerful resistance area between 50 and 200, but it was rejected immediately. Price was not even able to close above. Okay, so because of that, and since we have a high volume, if you take a look here, volume was very low. It was faded below EMA 20. There was no volatility, there was no big volumes in the market. But from there, when this downtrend started from here, okay, this downtrend started, you can see that volume not just crossed EMA 20, but went up higher and higher and higher and remained there. Okay, it means sellers are there. Okay, so sellers are there, they are making big selling volumes and are waiting for the market to reach their take profits. So that's why I have placed a selling order. Okay, because the sellers are there, their presence is available, that's first. And also when on retracement, okay, it was a great sell from here, but I started to trade from there. Okay, so the great sell was from here in the most powerful resistance area. But even though if you have opened your chart starting from here, it's also a great selling opportunity because you are still very close to at least the first support, the first resistance area. Okay, so by analyzing the market in this way, as you can see, we have very big red candles with very big volume, and the price was rejected here, so it means this trend is going to continue. The higher probability is this trend is going to continue. Okay, and that's why I have entered from there, waiting for this trend to establish properly, and I will be making lots of profits. Now let's discuss my targets. Okay, as you can see, my target would be below the last. That's what I'm talking about. Price started to go down, rejected on the first support area, resistance area, and from there it's drifting down. Okay, so my first target would be below the last low. Okay, so it would be somewhere there, let's say. It depends how the market is reaching my target, my take profit. If the market is going very fast to reach my target, and now we have EMA volume below EMA 20. Therefore, pay attention here to the analysis. Okay, you have entered your order, so your entry is already made. That's great. But now, in order to quit with profits, you have to target a price level. Okay, target somewhere in the market. So, since we have volume below EMA 20 for the moment, that's not a good sign, and that's why you are seeing these spikes. Okay, in the market, price is going up, down with these indecisive candles. We are seeing many indecisive candles, so it means price is indecisive because the sellers that made their selling orders here took their profits there, and on retracement they didn't enter the market again on retracement from here. Okay, so that's why price is not after retracement, price did not start to go down very hard. Okay, it was not going down in a very aggressive and fast mode, but now price is retracing again. So what we want is a big volume crossing EMA 20. Okay, big candles like here. When you see now volume crossing EMA 20, that's the missing sign that we need to confirm that sellers are back again and will take the market down again and again. So now, in analyzing this market, or actually when you are trading, you always have to analyze the market. It's never ever you just take the big title of a strategy and just applying. However, it depends on each situation. You have to trade each situation in the right way. So here, as you can see, price was able to enter the last resistance area, and now price is going up toward EMA 200. Okay, so price is not just retracing, it's more over reversing in this case. And let's see what will happen here. Okay, price is trying to reverse. So let's see what would happen from there. Okay, therefore, here we are. Price is trying to retrace from here. Also rejected in the last support, the last resistance area. Price is always receiving rejections, as you can see here. It's very clear. Price is rejected all the time, and now the big trend will start again. Okay, so price was not able to reverse, it was just a retracement, and that's why the trend will continue, and my take profit is there. So now we can, that's it, now we can see big red candles. Now we can see an aggressive mode. As you know, if you want to understand it very well, before the price can start trending in aggressive mode, it needs to retrace. Okay, it needs to retrace. After making some small retracement for the buyers, here we are in a selling, in a shorting trend. So for the buyers to retrace, to apply their pressure, to apply their volumes, their orders, to close their orders in the market, and then the sellers will take the market down. So you have to always know the main direction, and retracement is not a bad thing. Retracement is always happening before the trend starts. Okay, so here we are still missing the big volume candle. That's why we are still in these spikes. We are still missing the big volume candle and waiting for it to establish properly. We need the volume to cross EMA 20, so we make sure that sellers are back again and can take the market down in a very aggressive mode. Now you will see how the market will be trending down in a very aggressive mode. Okay, but as said earlier, buyers here tried not just to retrace, buyers tried to reverse the trend, to take it upward, to make it an uptrend, but was not able to reverse it. Okay, but buyers here tried to reverse the trend. Why? Because we have seen big green candles. Okay, but this one is confirming the rejection, and the most powerful resistance area is confirming first time, second time, third, fourth, and again that the trend is going to continue. This one is the most powerful resistance area in this case, because we are in a shorting mode. Okay, if it was an uptrend, this would be the most powerful support area. Okay, so everything is very well, your analysis is great, but you are just waiting for the missing sign, the big volume. The big volume indicates that sellers are back. That's it. So the main direction is down, everything is confirming, but we are waiting for these big volumes of selling to take the market down. And it's going to happen from first here, and now we are going a little bit on sideways, but now we will start to see this aggressive downtrend mode. Still missing the volume sign, as you can see. Take a look here. Volume crossed EMA 20 and was very high. That's why price was able to be taken like that. That's why price trended from there till there, top to bottom, okay? Because we had a big volume. Always in trend, you need big volume to see these big candles, to see this aggressive mode in trading. To take the market in one way, without any return, without any retracement for some time, you need to see this, you need big volume to see this, this price action, okay? And here also, as you can see, price is after going down, after reaching this low and rejected from this one, this candle is indicating the rejection. That's why price retraced from there. So if you were, let's say, selling from here, from somewhere there, and now you have you should close there when you see this candle. Analyzing the chart pattern is essential. You have too many shapes, too many price action patterns in the market. So you, by learning how to analyze these patterns in the market, your trading will improve, because now you can read the market better, not just analyze it in a technical analysis level. Okay, that's essential, but also it's a must to learn the chart patterns. What is the price dictating? What is the price indicating? Why is the price creating this pattern exactly? We have too many patterns, okay, in uptrend, in downtrend, in consolidation, and you have patterns for the continuation of a trend, you have patterns for the reverse of a trend. So all of these are essentials. For example, this candle here is indicating a reverse, and whenever you are riding this downtrend, if you see this candle, you should close on your profits, on your winnings immediately. Okay, here we are, price rejected again and again. Take a look here at these hammers, okay? This one is indicating that these candles are indicating more and more, confirming that the trend will continue, okay? This most powerful resistance area is rejecting the price once again, and the trend mainly now should have started. But we are still missing the obvious sign, which is volume crossing EMA 20, to make sure that sellers still want to take it further down. And it was not enough for them to take their profits here. Okay, so they took profits here. They should have entered from there, but as you can see from there, just some of them entered. Some proportion, small proportion of the sellers entered from there, made a rejection to buyers and took the price down. Okay, that's perfect, but this was a small proportion. That's why we didn't see this aggressive mode again. And from there, volume faded below EMA 20. It indicates the disappearance of sellers. Sellers are from there till there. Sellers are not available. Okay. That's why now we are still waiting for big volume to confirm that the sellers are returned and the trend will be taken down much further. Okay, that's what I'm talking about. Price started to trend down, and a great sign that EMA 9 crossed EMA 20 after, first of all, here EMA 9 crossed EMA 20 from above. It was not a good sign, but now finally we have the good signs that we need, which is EMA 9 crossed EMA 20 from below and continuing from there. The trend started, and that's perfect. Now we can continue from there. Okay, these big red candles that I'm talking about now are available. Now price will be going down much further. and we'll be taking profits here below the last bottom. After taking our profits here, we will buy till we reach the EMAs again. Focus to see how the process is working. But pay attention here. Volume was up somehow. That's why we started to see big red candles. But still, we don't have this one. We don't have big bars. We need big bars to take it down much further. So we are on the way. That's the key. To always know the main direction. To analyze it. To track it if you want. Okay. To analyze it. Where are you now? Where is the market heading? And what is happening now? Okay, you cannot be lost in the market waiting for it to act. You have to read it, to analyze it carefully. And the more you work on your market analysis, the better you become, the more you improve your trading skills, and moreover, the better results you will start getting sooner or later. The more you work, the faster you make the process. But you need the right information. You need the right information in Forex trading. Otherwise, you would be wasting your time. You always need the right information. Okay, that's what I'm talking about. That's it. Price started to go down again. Okay, we need now volume to cross EMA 20. Let's wait for it. We need volume crossing EMA 20. I will be sliding my take profit down much further. Okay, volume is getting up, but it's okay, perfect. That's it. That's it, volume crossed EMA 20, as you can see. Take a look, finally, the missing sign is available now. And that's why the market is trending down again. The missing sign is available now, that's what we wanted. And now the market will be trending down again to reach our take profits. Okay, volume crossed EMA 20 finally. I expected a bigger bar. Okay, I wanted a bigger bar to take it down further in a much aggressive mode, but that's fine. So you see it, here it was just a retracement. You see how to analyze it? Told you here that these all are rejections, indicating that price is going to return sooner or later to continue the main downtrend. And that's what happened exactly. Now price is trying to reach EMAs, but it's a very small distance. So buying this distance was not a great opportunity. Okay, instead we are waiting for the trend to continue, and that's normal. If price is going below EMAs and then return to reach EMAs, we know that it's very normal. Okay. Okay, rejected immediately at the first support, at the first resistance area. Rejected immediately in the first resistance area, and here we are. This is an inverted hammer indicating that sellers would not accept even price reaching the first resistance area. Okay, as you can see from this inverted hammer, so now price will be taken down much further, even though buyers are still trying to reverse this trend but unable. Sellers are much more powerful, and that's what we are seeing. Okay, volume crossed EMA 20, but it's fading again below it somehow. Let's see. Of course, you cannot control the volume of the market or expect at this second you want big volume. Of course not. Okay, but you can expect that to continue this trend, we will need a big volume. And since sellers started this trend, they will return back. Okay, that's what you can analyze, but you cannot analyze in each minute the volume that you want. Of course, the bar. Okay, that's it. Return back to our mission. Here we are, completing the trend. This would be an aggressive mode, as you can see. Rejections on the first. Okay, from there I'm talking. From there, after this retracement, price started trending down again, but this time it was rejected on the first resistance area. First time it was rejected on the almost second support area, resistance area, and here it was rejected on the third resistance area. But now the price is rejected on the first sub resistance area. It means this is a tough downtrend. Two inverted hammers immediately. Okay, price is rejected immediately on the first resistance area, so this indicates a very big trend. The market wants to go down. The market is telling to go down, okay, is giving signals of trending down, drifting down, but we need big volume in order to drift down. We need this big volume. We are still missing it. And now I would like to make a notice here. We are trading in the last day of this year 2020, and I wish you all the best with all my love for 2021. But pay attention on the start of 2021 or the start of any year. So the end of year, the start of a new year is a specific. It's a specific period to learn how to trade. Not to learn. Mainly trading during end of year, beginning of a new year takes experience. It's risky. So if you are a beginner, I advise you to pay attention. Okay, pay lots of attention, especially during the beginning of the next year, the first days. Okay, so this period is sensitive. It takes a professional, experienced traders, an advanced trader to know how to trade during the end of year and the beginning of the next year. Okay, so you cannot trade during these moments like you trade usually, because the volatility during these times is very high. Sometimes sometimes volume is up, then suddenly down, up, down, up, down. Okay, so things are not because lots of the traders are closing their trades now. We are at the end of the year, so the long-term traders who have opened their positions from the beginning of the year, now they are closing. Moreover, almost all financial institutions are now closing their positions, their trades. And too many traders, even swing traders, day traders or scalpers, are now looking to close their trades because it's a new year. So we are going into this holiday, and to start the new year, we are ending this year and then going into holiday for the new year. So the trader wants to enjoy his holiday and want to close his orders, and that's it. So that's why during this period you see high volatility. Volume is up, suddenly down. Price is trending, suddenly retracing. Okay, so everything is not on the right way during. But it's just the last 2 or 3 days of the end of year, and mainly the first 2 to 3 days at the upcoming year, or a maximum of the first week of the upcoming year. Okay, so what I'm saying is you should take into consideration this period. Okay, just take it into consideration in your trading. Be more safe. Of course, the safest way is to avoid trading, but you can trade in a safe way. Just take it into consideration with your trading analysis and your trading orders. Okay, so here we are. Price is rejected again and again. Price is keeping rejected from the last support area, the last resistance area. Since we are seeing these rejections, it means price is going on sideways for the moment. Okay, it's going down, then retracing toward the most powerful resistance area, then going down, retracing and going down, retracing and going down. So price will be breaking out this consolidation and trending down, but we are waiting for it. Okay, because we are missing the volume, that's why price is making these sideways. Okay, again we are seeing these spikes, and from there price should start mainly trading down. Let's see it. Okay, perfect. Price is going down again, making a gap here from price closed there, but made a gap. The open of this candle was below the closing price of the previous candle. Okay, I repeat, the opening price of this candle was below the closing price of this candle. Okay, so it's a gap indicating downtrend also. If the gap was higher, it would indicate uptrend. Price is always rejected. It's fighting the most powerful resistance area. That's why we are always seeing these sideways. Okay, price will always be going up and rejected, return, and going up until the price break down. But we need big volume to do that. So in this case, you will be waiting for the price to cross your orders again, for the trend to start again. Here, sellers was doing great because there was big volume, so the price was rejected on the first resistance area. But the absence of sellers later on revealed for the price the first sub-resistance area, second resistance area, but the sellers entered again there in the last resistance area. Okay, so if big volume was there, sellers would have taken the price down much further, and buyer would not be able to cross these support areas, resistance areas. So in this one we are trading the advanced mode, we are trading trends. We also trade the price when it reaches EMAs, and we trade support and resistance when the price is going on sideways. Okay, so we need to trade too many situations in the market. The market is always offering too many different situations. You need to learn how to trade them all. Okay, so here we are. That's it. That's what I'm talking about. Pay attention. The absence of sellers is confirmed with volume faded below EMA 20. Sellers are completely absent. They took their profits here and it was enough for them. But they want to enter again because lots of them remain there because price is rejected on this resistance area. It means lots of them will re-enter the market. Okay, but we need the full presence, the full volume to take the price down. Otherwise, we would continue like that, slightly up, slightly down. As you can see, price is always rejected on this resistance area. Too many rejections. This also confirms that the main trend is down. We're about to close this candle. 45, 46. Always pay attention to your market watch. 51. Okay, 52. If it closed like that, it's a great indicator of rejection. Okay. Okay, perfect. This one closed like that. It's like that. It's an inverted hammer. So buyers are not able to reverse at anyhow. And it's weird why sellers are not taking the market down from there. Why they did not take it down from there much further? And why now? What are they waiting for? So we need their big volume. We need their entrance. So mainly now it's the end of year, and as you can see, these things happen. They happen in the normal days also, but in this period they happen in much more frequently. Okay, so first time was there, sellers were absent, price retraced, Okay, second time also, okay, fine. But third time and fourth time, that's a lot, okay? But I told you that the market is highly volatile, very indecisive during this period. So you have to take into consideration that in your trading. So finally, let's hope that now is the trend we are waiting for. We knew from first that the main direction is down, but we were waiting for this retracement sideways to finish, and let's hope now it's done. Okay, volume is going up. Volume is going up, it's a good sign. Volume is crossing EMA 20, that's a good sign. Let's hope for a big bar. We are still in low volume, but volume crossed the EMA 20, that's a great sign for the moment. Instead of missing at all, we at least we have a good sign now. Let's see how the price would act from there. Okay, so mainly the price is going slightly up and slightly down. So let's hope now that this big bar remains. So this bar is, but I don't think so, because we are at the end of this candle and from Market Watch. So this bar could not be at this one. That's how you predict volume bars. Okay, we have talked in a while about predicting volume bars. Of course, volume is out of your control, but that's a way for you to at least think about it and predict it. Okay, you compare the start of the volume bar with Market Watch. If you are at the end and your bar is still low, so it means you will not get the same as before. Okay, price is giving, the market is giving very short signals for the moment. Shorting signals are in this moment the same missing sign over and over again. The volume, take a look, volume went up, price taken down immediately. Volume faded, price is unable to move down much further. We need these sellers in bigger volume. That's it. The missing volume is causing these spikes in the market. That's what I'm talking about, and that's how you analyze it. That's how you analyze your trades. That's how you read the market. That's how you predict the market, okay? Of course, you cannot control the market, how the market will do what it does. You cannot control it, but you can read it, you can expect it, you can start learning how to predict it. Okay, that's what we are talking about. This indecisive that I'm talking about. Volume went up and then down. Price was trending down and then a retracement suddenly. Okay, so this indecisiveness is always available in the market, but during this special period of the year, it's more available, it's more frequent. That's why trading in this special period should be taken into consideration, that you are trading during this special period. Okay, that's perfect. I'm still waiting for the price to move from this last support, from this last resistance area, move back down and continue this trend. Sometimes you wait like here, sometimes it's much faster. It depends on the market, how fast is it going, the pace of the market. As you can see, rejection again. And hopefully this time the price will continue this downtrend. So here we have, of course, support and resistance. This is the resistance zone, and or this line if you want to draw a resistance line. This is support line if you want to draw a support line. That's your support line. Price is unable to break this support line, but price will be breaking it very soon. That's what I'm talking about. Price started to break the support line, and we hope that it will continue down much further after breaking this support line. Okay, buyers tried to take the price up but rejected immediately from sellers, and the price is taken down again. We need to cross now this support level. If price break this support level, the market will go down much further. That's what I'm talking about. Okay, big volume. The missing sign is available now. Big volume. Take a look. The big volume. The missing sign is available now. That's it. Okay, perfect. Now that's it. That's perfect. The missing sign is available for the moment. So the trend started well. We need this bar also, this volume bar, to be above EMA 20 to confirm their presence again, the presence of sellers again. We need to confirm it. That's it. I'm 38.42 already in profits, and we are still waiting for the market to establish very well. Okay, that's what I'm talking about. This is going to be a tough downtrend because volume is remaining above EMA 20. Volume is remaining above EMA 20. So volume, the market is giving very shorting signals. Okay, I'll be removing my take profit, cancel take profit. So I don't have any take profit for the moment. I will just be enjoying my profits getting larger and larger, and I will show you where to quit exactly. Okay, so price now is retracing toward EMAs, no problem. You just wait for the big trend to establish. Now we have a support line here, which was the last bottom, but price will be able to break it very easily. As you will see now, this last bottom will be broken by the price. Okay, 60, 58 and $60 in profits, and price is unable to break it for the moment. But okay, let me zoom here. Price, as you can see, price is in this support level. Okay, broken 80. I told you this is going to be a very big downtrend. Okay, 90, and now we will reach $100 in profits. I told you that it's going to be a very tough downtrend. That's it. Okay, here we are. I am riding this downtrend. That's how you ride the trends. $96 in profits. That's how you ride big trends. I'm still riding it. Volume. I told you that we were missing the volume sign. Volume needed to be above EMA 20. We were missing the volume sign, and here we have it again. Once the volume started to cross EMA 20 and was up very high, here it indicates, it confirmed that sellers are returned back, and we were waiting for these sellers here for many minutes. We have waited for these sellers. Many candles passed, a long period passed without the presence of these sellers. They were completely absent. So we were waiting for them to return, and from there, this big volume confirmed their return. Okay. If I would have remained my take profit, now it must be taken. Okay. Now it must be taken. Price is trying to reach EMAs, but is not able. So we will continue the trend from there. It will continue the trend from there, and it's going to be a tough downtrend. You see it? We were missing the volume sign, like here. Volume was below EMA 20. Once volume crossed EMA 20, the trend started. And like here, volume was below EMA 20. Once volume crossed EMA 20, finally sellers returned, and the trend continued again and again. Okay, and now the price wants to reach EMA 9, almost retracing for it and then trending again. That's fine. Price is trying to retrace toward EMAs. That's also acceptable. Okay, from there, now price is in the first support, first resistance zone. Pay attention here. The first resistance zone is on my orders. So my orders are protected by the first resistance zone. And that's what I'm talking about. This is the protection I'm talking about. Price would most probably be rejected on this support zone, and when the trend starts trending down, establishing properly, the more it trends down, the more EMA 9, EMA 20 moves down further, because EMAs are always following the price. The more the price moves down, the more the EMAs follow the price down, and in this way your EMAs would be below your orders, and in this case the first resistance area would be below your orders, and here your orders are protected by the first resistance area, because this first resistance zone and second one are the zones, the difficult zones for the price to break. Okay, why price is retracing? Because from here, take profit, sellers took their profits. That's what I'm talking about during this special period. It was only a very short trend, big volume 1, 2, 3, and then remained, then faded down below EMA 20. All of a sudden, okay, all of a sudden. That's what I'm talking about. This high volatility during this period. Price was going down. It was a normal downtrend, a great downtrend, but then suddenly retraced. So it didn't make a big downtrend because of this high volatility during these periods. Traders are closing immediately their trades. They are afraid to leave their trades open for the new year. Okay, they want to. That's why you are seeing short trends, because the traders want to close their trades as soon as possible before leaving them open till the new year. Okay, you have to pay attention for that. You have to also take it into consideration that traders want to close their trades before the end of this year, and that's why mainly you will be seeing short movements in the market. That's why you are seeing some short movements. Okay, price again is retraced toward the resistance areas one by one, and from there it will start trending down. As you can see, the last bottom was broken. As I have told you, here it was broken, the last bottom. And now we are making this downtrend, this resistance line, if you want, for this downtrend. It's a resistance line. Price is again on EMAs, and from there it will start trending again. So we are waiting for it to establish properly. I could have also closed there, okay, but I know that this trend can go down much further. That's why. Okay, and since my orders are above the support area, so I can wait easily for the trend to move down much further. Okay, because I'm protected by these support areas, and here is the protection. Price retraced toward these support areas, and that's it. Price is always rejected in these support area. Let's see how price will act from there. Okay, price is always, or buyers actually, are always trying to reverse this trend but unable. As you can see clearly, they are always unable. Rejection, okay, the price should start trending from there. We still need this big volume. So here, pay attention. Sellers are entering twice. Their traces are very well understood. First trace is here. They took the price down and closed, took profits and quit. Then they entered here from volume. That's how you analyze the volume. They took the price down and closed here. So they are making it very short. Okay, from first sign, and now second sign. They are making short trends. So in this big downtrend, they are making short trends. Okay, they are making these trends. Okay, perfect. That's it. So their presence is available again. Here volume crossed EMA 20. So they are available again. Volume crossed EMA 20. And from there we'll be going to take the price down much further. And at this time, since you knew that sellers are taking the price down just a little bit, so you cannot expect big moves. Okay, so your take profit would be just below the last bottom. Okay, that's what I'm talking about. That's what I'm talking about. So the whole chart pattern is very well understood. Okay, from their first appearance, their second appearance, it's very well understood. Okay, so here I will start to close my trades. That's it. Price is taken down again, and their big volume here is their presence. If you take a look, volume faded below EMA 20, volume reached EMA 20, and now volume is able to cross above EMA 20. Okay. Okay. So here we are, volume is below, price is below EMAs, volume is still below EMA 20. That's not a great sign, since volume is below EMA 20. So I'll be closing here at the last bottom. Okay, so I'll be closing at the last bottom since sellers are not available in big volume. Okay, if sellers are not available in big volume, so it's not a good, it's risky to remain waiting for a big trend. So you close your profits with a small trend, with a small drift down, with a small down drift. Okay, that's also perfect. At the end you are making profits, and in this case that's also perfect. Okay, so that's it. That's what I'm talking about. Price is going down again. It's going down again. I'm on 70, 60, and still waiting for the price to reach the last low. Okay, 70, 80, and we are still waiting. Okay, here I will be closing near the last low. Okay, that's it. Now price is trying to get rejected. Okay, so let's pay attention here. Price is trying to reject. Okay, market watch 40, 41. Okay, if this candle is ending like that, it would be a big signal to close. Okay, it would be a big signal to close if this candle is ending in this way. Okay, 54, 55. Pay attention to the market watch. 55. Okay, I'll be closing now. Let's see how much I'll. Okay, $60. Okay, that's perfect. I'll be closing my $60 profits. Okay. Okay, I have closed my $60 profits, and now I'll be reversing a buy order. Okay, I have closed my $60 in profits, and now I will be making a buy orders to reach this one, EMA 50. Okay, now I'm looking for EMA 50. That's it. You see it? You see it? You have to read the market. You have to analyze and read the market. Okay. Because of this candle here, price action, because of all the analysis, the preceding analysis, because of the missing volume sign here, we have closed this shorting trade with, here my profits were 100, okay, but here I made 60. That's great, and now I will be making much more. That's another 25. I'm still waiting for the price to cross, to reach EMA 50. 50. Okay, I'm here for waiting for EMA 50. That's how I make my $100 again. That's how I make it again. Okay, that's it. You see how to make your profits. Never ever be greedy. Here, one of the keys of your success are to control your greed. So trading psychology. One of the key success in the market, as you can see, you have to control your greed. If you were greedy here, waiting for a more downtrend, you would be losing. Okay, so you have to analyze the market very well, but analyzing the market, trading it without the right control of your emotions is nothing. That's it, $40 in profits, adding to the 60, that's it, you have made your $100. Okay, so here we are waiting still, and I'm still waiting for the price to get up much further toward these. Okay, perfect. Why I am waiting for this one? Because from these support and this consolidation, this ranging market, we have support, resistance. Okay, so EMA 50 is doing great at rejecting the price, and you can take your profit near EMA 50. And now since we are near EMA 50, here I will be taking my profits. Okay, that's it, before the price reverse. That's it, that's what I'm talking about. Okay guys, as you have seen in this video, you have to not just analyze the market. Okay, and now from there you can continue this pattern more and more and more. So first of all, pay attention during this period, end of year, start of next year. Pay lots of attention. Then the second key point, start controlling your emotions. Start trying at least to make fear and greed out of this trading career. Okay, never ever be greedy or afraid. Then start analyzing the market. Start trying to read the market. Analyze everything as I'm doing. Learn very well and start applying. And that's it. That's it for today. Thank you for watching. My best wishes, and see you in my next video. With all my love, King of Forex.